Hi students, this video will discuss shipping terms, specifically FOB shipping point and FOB destination in a merchandising business. In a merchandising business, a company purchases merchandise from another company for resale, as we discussed in a previous video. So the question here is, what happens to the merchandise when it's in transit, when it's between the seller and the purchaser? So we have some rules that we go by here. If the shipping terms are FOB shipping point, that's freight on board shipping point, then there are three things that happen. The title passes at the shipping point. That means who owns the merchandise? The purchaser owns the merchandise when the goods are delivered to the shipping point. The purchaser assumes the risk of loss in transit because they own the merchandise, and the purchaser pays the freight charges. Okay? If it is FOB destination, then that's freight on board destination, then the title passes at the point of destination. Therefore, title does not pass until it reaches its destination. Therefore, the seller still owns the merchandise until it reaches the destination, and the seller assumes the risk of loss while it's in transit, and the seller pays the freight charges. Now, if the purchaser pays the freight charges, then that's added to the cost of the inventory. And under a perpetual inventory system, the freight charges are simply debited to merchandise inventory. Or they may be included in with the merchandise when it's purchased, but it would go to the merchandise inventory account. If the seller pays the freight cost, then it is an expense to the seller, so it would be freight expense or transportation out, because they're paying for merchandise that is going out. They are the merchandise that they have sold. Now, sometimes the seller will pay for the transportation costs for the convenience of the purchaser, even though the purchaser is required to pay the freight charges. And if that is the case, they will include it on the invoice, and they will include it in with the amount that the purchaser owes to them, and that amount will be paid by the purchaser when they pay the account receivable to the seller. Okay? If there happens to be a discount, a sales discount, which is taken on this merchandise, and the seller did pay for the freight costs, then keep in mind that you do not take the discount on the freight costs. So it gets a little tricky when you come up with that calculation for the amount that you actually pay. But that is covered in the textbook. And if you have any questions on it or anything that we've covered here, please let me know. One last thing, this probably will be the last video, so I will mention closing entries very briefly. The closing entries are very similar, or the same really, as we've had for a business that is a service organization. The only difference is you're going to have some accounts in there that are contra accounts. So you still have the 4 closing entries. You're going to close the revenue and the income summary, but if you have contra expense accounts, you're going to close them with that entry. You're also, the second entry, you're going to close all the expense accounts into income summary, but if you have contra revenue accounts, you close them with the second entry. The third entry, of course, is to close income summary into capital, and the third entry to close income summary into capital, and the fourth entry, you'll be closing the drawing, if it is a sole proprietor, into the capital account. So they are similar, but you do have some additional accounts there that you have to keep in mind. Just to review that in the textbook, and if you have any questions on that, please let me know as well. Thank you.